Well, this is getting fun. You're looking at the S&P 500 here via the SPY, and on the one hand, we're creeping right up here on lighter volume. On the other hand, we're getting right close to this critical juncture where either we break above tomorrow, which means we can go back up and retest these highs, or at least one at a time, right? This area right here, and then potentially retest these highs, or we roll back over. So the question is, we're going to eat bear meat for Thanksgiving, or what would be the opposite of bear meat? I'm not sure. Or we're going to go higher. Same thing in the Qs. Took the Qs. Qs are weaker just in terms of not being able to get off the mat to get up here. So we'll see what happens. So far, this is still a dead cat bounce. Still believe that we're going to come back down here until proven otherwise and retest the 541 here, even though I have 551 marked. And on the S&P 500, if this does break lower, you're looking here at the I think it's 615, even though I'm showing the 619 area on this chart. So I think we could go lower. We'll see. I mean, I don't know. And seasonally, they like to take the market higher. This is why we trade what's in front of us and not our opinions. On the one hand, there's strong stocks that are pushing the market higher, like Apple, right? Apple was strong, although it rejected today. Why? It rejected the highs because there's not enough volume, right? You had 86 million shares, and today in the daily, you're pushing up here with 46 million. Not enough to push it higher, so it's coming back in. Google pushing higher, right? So on the one hand, there are generals in this market that are taking the S&P 500 and the Qs higher, the Nasdaq. On the other hand, you still have people like or stocks like NVDA, which is a disappointment, right? NVIDIA getting crushed. So we'll see what happens tomorrow. We're not excited about getting long anything here because between these two lines, let me remind you, these two bluish lines. This is all consolidation. And in the middle here is where most people get chopped up and lose money. I'll say, and this is my opinion, not a true fact, but 80% of people lose money in this area right here versus buying the breakout. Same thing with the QQQs. And we have to look at the SPYs and the QQQs because it can be different on stocks, but it gives you a general overall look at what the market health is. So we'll see what happens tomorrow. Volume will continue to dry up on the day before Thanksgiving. But we're up here to critical junction, which is this yellow line. Will we break above it and and sustain it, or will we spike it and reverse lower? That's the fun of the market. We'll see what happens. Until then, don't be in a hurry to do anything. No reason for FOMO. The market always gives you an opportunity to get in. As I pointed out, I think last night, one more thing here, and I'll point it out again tonight in the SPYs. You know, if there's a scenario where we're headed higher, we spike the lows and we're headed higher, which is possible here, even though we took it out on greater volume. We were using an example that this spiked up here in April, right, to the highs, and then it gave you the opportunity to get back in. So that will happen again. There's plenty of time to get in the market. There's never a hurry. So keep your powder dry and have fun tomorrow as we watch and kind of see what happens. Hope that helps.